and welcome to the VSA Capital Tech and Transitional Energy Podcast. It's Thursday, December the 4th. Bit of a chilly day today, isn't it, Phil?
Yes, it is. It's grim and grey outside, but we're looking forward to Christmas.
Talking of Christmas seems to, I don't understand it. This year, Christmas has started really early. Why has it started already? We're only just in December, but people seem to be winding down already. News flow is getting quiet. The trouble is winding down now for Christmas is we won't get going again until probably, January the 12th, because people will want the first week of January off. So it's like we almost shut down for a month. We now seem to shut down for 2 weeks in the summer, shut down for a weekend over Easter. People only want to work 4-day weeks because they don't want to work Fridays. They want to work from home. I mean, who's doing any bloody work around here? It's anyway, I get frustrated, but
Well, I did some this morning for you, Andrew.
Good. Well, I hope it's more than just this morning, Phil.
It is indeed.
But it is. It's
Yeah.
Anyway. Look, we are sadly the markets are starting to shut down for Christmas. People are sort of saying that's it. We're closing the books, but that doesn't mean to say there won't be a little secret Santa surprise every now and then. I'm quite hopeful that there's a couple of companies that we're active in that have got a few secret Santa surprises to come for the year end, but obviously I can't discuss them on this podcast. But I'm hopeful. I keep opening the Advent window, hoping to find something inside it, and maybe tomorrow. Anyway, talking of Advent calendars and things that are happening, just a little bit of promotion. Why not? It's our podcast.
Absolutely.
On January the 22nd, we will be having the VSA Vision contest, which is a little bit like the Aquis conference we set up about just over 2 years ago, I think, where we invited companies to come along from Aquis to run a competition. You have to present it in 8 minutes. It's a very good thing to be able to present your company in 8 minutes. But this year, on January the 22nd, we are doing the VSA Vision contest. We will this time have about 8 companies involved in transitional energy, and also the mining sector and the oil and gas natural resources sector, because we cover that. From the transitional energy sector, we will have Origo, Equipmake, and Quadrise. Obviously, that's fuels, emulsion fuels. And also we have got as our guest speaker Richard Tice, who is obviously the deputy leader of the Reform UK Party. Now, by the way, this is not some of you know my political views, but actually this is not a political sort of broadcast to this event, conference, what you want to call it. It will be politically neutral, but obviously a lot of people want to know what Reform are thinking about for commodities, energy, tech and transition energy. And it'll be a great opportunity to be able to talk to and listen to Richard about his thoughts, and actually interact with him as well. Richard obviously wants to know what the city wants, what companies want from Reform, so that he can try and see if he can achieve what people want to get the whole economy going. So I think it'll be a pretty exciting event, and we will obviously be talking about it quite a lot more. And then, we need, not that I want to get political, but I did notice this morning in the headlines, Ofgem comes out, Phil, I don't know if you're going to talk about this, 90 billion is going to be spent on sort of upgrading our electricity capability. But at the end of the day, let's not kid ourselves, that 90 billion has to come from somewhere. And it's an interesting point. Actually, there's another interesting point here whilst I'm ranting away. Yeah. Somebody did say to me the other day, they said, you know what, we on this podcast, it's basically a 25-minute podcast. So it's 23 minutes of Andrew Monk ranting away on political things and then 2 minutes of things. That's not true. It's not true at all. But the point is, they announced 90 billion of expenditure.
Yeah.
Governments don't actually have any money. People forget that. They govern. They don't own money. So when you see a government is decided to give 90 billion to do this, no, that government hasn't. The money has to come from somewhere. Sadly, it's often you and me, Phil, the taxpayers.
Yes.
And we are taxpayers. We go indeed to work every day. We don't stay at home and just claim universal credit. I'll just slip that in. But the point is also, it was quite interesting because a lot of people have been talking to me recently about, well, hang on a second, but the government keeps saying they're going to do this, they're going to put money into, battery recycling or into mining. Governments don't have money. what they do try and do is set up these organisations which then have the money and then can actually place the money where they hope that they'd like it. And they give these instructions. And, we have National Wealth Fund, British Business Bank, APC that do the grants, isn't it?
That's right, yeah.
But, of course, they don't all necessarily tie together because at the end of the day, the money sits with one institution. The government says, well, we'd like it to go here. That doesn't mean to say it will go there. It's very complicated. It's no one's fault. Everybody's trying their hardest, but sometimes also these mandates sort of cross over. You're not quite sure exactly what the mandate is and whether it fits with government, etc. So it's quite a difficult minefield to get over, and people shouldn't get stressed if they think that something should be happening and it isn't, because actually everyone's trying their hardest, and actually there are quite a lot of good things going on. Now, I don't want to say there's good things.
No, but that's a very, very fair point, Andrew, because the same has been happening in the US with its funding. We have the CHIPS Act in the States, we had IRA in the US, we now got industrial investment coming. There's all these government pockets getting investment, but moving in different directions, but hopefully with a good central aim.
I mean, what actually, and I think the government is starting to get it, is actually if you incentivise the general public to invest, they will tend to invest where they see a good return.
Yes.
And if you think that, as clearly Ed Miliband does, that going net zero is a good return, that's where the money would naturally flow. Far better to let money flow naturally because people can see that it's going to be successful than trying to force it somewhere where it's not going to be successful. No one wins from that. Natural investment, and just put in sensible incentives like no stamp duty, cut down on capital gains tax.
That's right. Look at the ISA structures.
Yeah, I mean, we all know what the answers are, but no one bloody listens. Anyway, there you go. Come on, that's enough of a rant anyway. So I've got a few things off my chest there.
Well done. But I was going to cover the off-gem package anyway. But I mean,
say what you think about it, Phil. But do it quick, because otherwise it'll take up my time. No, come on, get on with it.
Quick. Well, the grid hasn't had investment for decades. The UK grid, it's needed upgrading, and clearly energy demands are changing, especially with the data centres, but also renewable energy, the curtailment that we had. The energy needs to be transported over the borders in Scotland efficiently, and we are importing a lot of energy. We're importing gas. We're producing ourselves. We're importing over the interconnectors, electricity. We've got to generate energy here efficiently and cheaply because it's at the core of economic growth, enabling economic growth.
It is. And of course, the way they're going to do it, and they've announced today, they do it. It will be done, shall we say, by certain UK listed companies, won't they? So National Grid, SSE.
Yep.
I think it was Scottish Power.
Southern.
What they call? No, SSE is still.
There's SSE EN.
No, that's all part of it. That's all part of it, isn't it?
Right.
Yeah. Come on, you're supposed to be the analyst, Phil. Get your act together. I thought you were doing some homework before we even got on this bloody podcast.
All right. You'll get a formal note of apology there, Andrew. Right.
But actually, of course, that goes back to why the other day SSE raised $2 billion and the stock price went up, because everybody thought, well, actually, that's obviously it took away the need for a fundraise because they got the $2 billion. But people could see that actually they're going to invest the money and get a good return on it, hopefully. SSE's come off its top a little bit, did peak at about £23. It probably was a bit high. I mean, I do sometimes talk about trading SSE. I am a hopeless trader. I'm a long-term investor, so I didn't trade it out at £23, even though I probably was telling people they should. Currently sitting at about 21.80. So, but I mean, it's about the right price for a bit at the moment. Anyway, but yes, so that's. Have you got anything else you want to say on that or not?
No.
Other than the fact we have a chronic shortage of energy. We call it energy. But, we could have, it's not beyond the wit of man that we could have blackouts this winter.
Yep.
That is the state, unfortunately, of our energy system. Because, as you say, we now rely upon importing gas, which is crazy when we've got so much of it, either sitting in the North Sea or underneath the ground if you were allowed to frack it.
Yeah.
And most people just don't understand fracking, and actually there is zero issues with fracking. We get more of a vibration sitting here in our office in London recording this podcast as a tube train goes underneath than you would if you were fracking. But there you go. Don't get me going on that either. That's for an oil podcast. Right, what else we got, Phil?
It has been short on company news, getting to be that time of year. We had Discover IE Group, 572 million market cap. The ticker's DSCV. Shares are down 15% year to date, but we'll go into detail on that. What I would note is this is an electronics company. And they design its magnetics controls, sensing connectivity. They're supplying industry mainly, and they employ 4,500 people across 20 countries. So it's quite a big group. They announced an acquisition today of Trivol. It's a Slovenia design and manufacturer of communications antennae and mass for defence and professional applications. They're paying, just looking at this, £40 million, an earn-out of just over £6 million, and this company have revenue of 11 million. So it looks like it's paying about four times its revenue, and expect to be earnings accretive. I should think so, given the multiple that they're paying for that. But clearly, it's getting them more into the defence sector, so that could be a very good thing for Discover IE. And sticking with defence electronics, but also satellites. Communications, Viltronic, who we talk about a lot on this podcast. Company, 300 million market cap, shares are up 84% year to date. This company's been doing very, very well because it supplies radio frequency electronics for space, aerospace and defence, but particularly in space, it's been doing very well because of Starlink. Its amplifiers are used in the ground networks for the Starlink satellite network. It's receiving large orders from Starlink, which is ultimately run by Elon Musk. They had a small announcement saying that 1.2 million funding for the UK Space Agency's National Space Innovation Programme. It's a bit of a mouthful. We do have actually a quite large space industry in this country for satellites, for electronics, communications, technology. So they've received a £1.2 million grant, and this is for advanced amplifiers to replace travelling wave tube amplifiers, which I remember from my student days. That technology has been around for years, but this is for applications in in-flight connectivity, communications where you're flying, and 5G non-terrestrial networks. So there you go. So that was Viltronic. Scientific instrumentation company now, SDI Group, tickers SDI, 75 million market cap, had its interims. They design specialist laboratory equipment, industrial scientific sensors, and they said that they had significant contract wins across the portfolio for delivering its second half of 26. But its interim revenues increased by 10% to £34 million. And within that, organic growth 3%. We're always looking on this to see, the split between that and acquisitions. So that's 3% on a constant currency basis, but 7% from organic. All important gross margins were up to 66%, and their profits on that turnover growth of 10% up by 17.7%. So good operational gearing there for SDI Group. A pretty reasonable set of interims, and they ended up with cash from operations of £4.2 million as well, generated on that revenue. A company I've not come across before is Quantum Base Holdings. The ticket is QUBE. And this is a quantum science technology focused on creating a new global standard in authentication and IDs. So I'll say I've not looked at this one in detail, and I will do, but they have a their proposal placing actually looks like they've done it, raising £4 million before expenses. There was a retail offer within that for £0.75 million.
Not one I know either, I must admit.
No,
so moving fast on, neither of us know anything about it. What are we talking about it for?
Well, just I've done placing anyway. So NARF Industries. This is a small cyber company. I've not really talked about this one before. It's only £9 million company, but they've announced they've secured a $3.6 million contract with the US government R&D agency. This is for a 2-year project around computer systems recovering from cyber attacks. It's quite interesting, actually. It says the award brings a total award on this contract in the past 12 months, $10 million. So, what's interesting is this is a very, very small cyber company working with a US agency.
Yeah,
sounds good. Yeah. So, we have an intention to float. We have an IPO intention
intention to float.
My word.
There were a few little ones out today. Actually, it was quite a busy day today for RNSs. I don't know if you saw one client we should mention is a client of ours, Time to Act. They announced that they are talking to the administrator of Vasarian about possibly picking up some of the Vasarian assets. Obviously, very cheap if you pick them up off the administrator. Vasarian, I mean, it was a 200 million market cap company once.
Right, I remember that. Yep.
Had a lot of high net worth interest, always up on the bulletin boards and that sort of thing. So it'll be interesting to watch there, see what happens.
Graphene technology, isn't it?
They've got all sorts of graphene technology. They've got actually one little division that uses quite a lot of tungsten, which is obviously of interest to me. So another one is a client of VSA is a company called Intuitive Investment Group. This one we've occasionally mentioned. All of its business is in China. It basically does the lottery out in China, but it is supported by the Chinese government, which is the key. So it's a really proper company, and they have just signed a really interesting strategic cooperation deal with Yingsheng Payment for their Lucky World group. So that's one where it's very difficult to understand. I'm not going to try and explain it here. It's one where probably I need to go and wander around China and do a sort of a localized podcast and video and write it all up. ITM Power, they had a trading update today, record half on revenue, robust cash position. As they put it, continuing our growth journey. It does feel as though this little subsector space has turned the corner. So because Ceres is feeling a little bit better, AFC is feeling a little bit better. I have actually now been at last in touch with AFC and John Wood, the CEO. I invited him actually to come to our VSA Vision contest. He couldn't make it. He did promise me he'd come and see me at some stage, so hopefully he'll keep his promise. Another little one today that announced was Techmar. They got an €8 million contract this morning. They put out a trading update, which is pretty good. Techmar, we used to talk about quite a lot a few years ago. I mean, this company once had a price of nearly 200p. Today it's sitting at 6p. And I would guess they've turned the corner. They do these subsea cables and connections, don't they, out to the wind farms and that sort of thing. Which, we just heard how much money is going into that space.
Yes.
So I would suggest that Techmar is probably quite an interesting one to have a little look at. We haven't looked at it for a long time. Again, it's probably one we should touch base with Phil. Hi, Phil, go and ring the CEO. Right. Let's have a little chat with him. Yep. And I also noticed that Gelion put out it had reached a key industry milestone in coin cells for their advanced sulfur cathodes. Again, we've talked about Gelion quite a lot. So I would skip quickly over that one. Yeah. But yeah, quite a few announcements popping out today. It was actually a busy morning. A couple of other things I'll actually just mention. I'll call this rumour corner or something, but my rumours are normally pretty damn.
Yeah, you do quite well there.
But I believe a major Scandinavian bank has decided to withdraw all of its money out of UK equities. It has a massive global fund. The problem with that is they had quite a few billion in UK equities and small cap equities, quite a lot of it in tech and transitional energy. I happen to know. I know the name of the bank, of course. I've gone through, looked at all the stocks they own, and took a big gulp and thought, no, I'm not going to mention which stocks they are on this podcast because I don't want to see the price crash.
That's right. Absolutely.
Unfortunately, I own quite a few of them. They obviously had very good taste. Well, no, their fund manager was a very good. Well, they had numerous fund managers, actually. The numerous fund managers have lost their funds. But their fund managers were very good. So there will be certain stocks out there that suddenly seem to have a lot of stock coming out. And everybody go, wonder why? And the answer is it's purely because they've taken a strategic decision to pull out of the UK. And likewise, I believe a mid-tiered US investment bank that had quite a large UK operation has decided to pull out of its UK operations in terms of UK equities capital markets because they, again, there is a feeling that it's going to be quite difficult to make money in all of these things. I wonder why. I'm not going to answer that question.
But you could. I see what's interesting, though. JP Morgan have announced a massive headquarters down in Canary Wharf.
Yeah, which is when actually, if you remember, Jamie Dimon said, he was going to pull out of the UK, I think about 5 years ago. And now he's a complete U-turn. Look, I mean, you don't want to read too much into these things, really, in fairness. But it's obviously disappointing, and I say it will explain certain stock price falls possibly. All right, that was quite a lot. Quite a lot of advertising of VSA, and we'll probably end up doing one next week, I suspect. See if we've got a few more Secret Santa surprises flying out of the advent calendar, and then we may call it a day. We'll probably be at lunch. So I hope everyone has another very good week. Thank you.
Look forward to chatting next week.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.